Stephanie, you're trimming Bed Bath & Beyond ahead of next week's earnings call. Why is that? What's driving your decision?
Well, it was really more the anecdotal information that we've been hearing from Walmart, from Dollar General, from The Gap, from a lot of different companies that the environment, the consumer remains very picky. The environment remains very challenging. And I think even though Bed Bath & Beyond is one of the premier companies in terms of returns, in terms of margins, in terms of their growth strategy, we love it. It's just that I think that they are vulnerable to the same macro pressures. So we'd rather trim it ahead of the quarter, still own it. So if we get a good quarter, we'll participate. And if it's weak, we'll actually buy more, we'll double down. But I just think right now the macro is very challenging for the entire space.
No, do you think that the quarter will be okay? It's just going to be the outlook that we're going to...
Yeah, well, that's a great point. I do think the quarter will be okay. They have very easy comparisons in terms of comp. So I think 3-4% kind of comp. I think the big question will be margins. Can they deliver margins? Remember last quarter, that was disappointing. I do think you're going to see margins come in okay. Do they expand given this macro? That's a big question mark. I do think 2013, what helps them is cost plus, that acquisition, which they'll drive productivity, they'll drive efficiencies, and that should help drive better earnings growth and also help margins. But I think in this quarter, that's what I'm looking for is the margin, how they deliver that, and then where they see that going forward.
Okay, now, so this is a retailer. We're in the holiday season. It sounds like the sales are going pretty well across the board. Do you stay away from retail going into 2013, given the macroeconomics, or is there certain retailers, you mentioned Walmart's, concerned about what they're going to see, so the low end seems like they're struggling?
Sure, the low end is definitely struggling, and unfortunately we had the wrong side of Dollar General, and we decided we cut our losses because even though it had fallen so much, I do think you're seeing a very competitive landscape, not just from Walmart, but the drugstores too, CVS and Walgreens as well. So I just think that space, unfortunately, great company in Dollar General, but I just think that space is going to be challenged. So one name that we're looking at, we've talked about before, is Nordstrom. If it were to get to that low 50s, under 50, I think that the stock, they've got the merchandise, they've got the strong inventories, and I think most importantly, they've done a lot of self-help in terms of their supply chain initiatives and that kind of thing. So that's one that's on our radar screen, especially since it doesn't seem like the high end is being as impacted as the low end.
Okay, that's the strategy we'll go for. High end in retail is better than the very low end.
At the right price.
Yeah.